Hi, I'm Doug Mackenzie for FF News, and on today's episode of the Fintech Show, we're going to be understanding how banks and fintechs alike are working together to improve their environmental, social and governance score. I travelled to Amsterdam to speak with Peter-Jan Van De Venn from Mobiquity to find out what their organisation was doing to help institutions, both large and small, really reduce their carbon footprint and create a better place for the environment. I also spoke with ING Bank's Global Head of Sustainability, Anne-Sophie Castelnau, and she told us how they were working on wholesale situations and solutions to reduce their carbon footprint from industries such as airlines, but also reducing the carbon footprint of their retail customers too. So if you care about the environment, you've got to watch this episode of the Fintech Show. Peter, how are you doing?
I'm doing great, thank you.
Amazing. Now, Peter, I think that this is one of the biggest missions that a lot of banks around the world or financial institutions are facing, and that is how do they improve their sustainability, but also their customers' sustainability. Now, I'm intrigued. Can you tell us a bit more about how banks are improving their eco-efforts for themselves before we find out about how they're improving their customers' eco-efforts?
Yeah, what we've seen, we do yearly research on ESG, let's say goals of banks and also how they measure it. And what we see is that all the banks have a program around ESG. But what we also see is that about half of them is actually not measuring even the impact that they have. The intent is definitely there, but we see there is still a way to go to actually implement it. So programs are there. But there is two other factors that you have to take into account. One is that regulation will change. Banks will be forced to work more on ESG, but there is another force that you also see is that also with the new generations coming up that are, let's say, more looking into connecting to brands that have a purpose, and ESG is of course having a purpose. So what you also see is that banks have to understand that their reputation and their brand in terms of ESG is also very important. So measures will definitely be taken. And the question is, what can you do, of course, as a bank? You know, I'm in technology, so I look at it from that perspective, right? If you look at the reports, moving to cloud, for instance, is something that will reduce your carbon footprint.
I can imagine.
In the end, a bank is an IT company that provides financial products, if you ask me, right? And so there is a lot of, let's say, capacity needed in terms of, let's say, computing power. Yeah. And moving that to the cloud, of course, is something that will help banks also to reduce their footprint. And besides that, there's of course also all the programs that are not technology related, but I like to look from the technology angle, of course, because that's what we do.
So indeed, I'm Global Head of Sustainability. So what does it mean concretely? It means that me and my team, we advise the board on the direction we want to take on the sustainability front, and then we ensure that the business, the organization, takes it on and make it happen, really owning the how we are going to move forward together.
Fascinating to be able to have such an overview of the strategy in such an important time. That must be very exciting. So thank you so much for joining us.
I'm very happy to be here.
Perfect. Now, could you tell us, Anne-Sophie, about ING's sustainability strategy and also your Terra strategy going forward?
Yes, so Terra is the name we use for our what we call a climate alignment approach.
Right.
So what does it mean concretely? We as a bank contribute to CO2 emissions. This is with our own activities, but also through the portfolio of loans that we grant our client with. So as to tackle our own activities, we monitor and we reduce year after year the use of energy we have as an institution, but also the impact we have on traveling, for instance. For that we have very clear targets. But where we have the most impact in terms of CO2 emission, this is through the lending we grant to our clients. So we have looked at that, and using a science-based approach, we have identified 9 sectors that are the most CO2 intensive sectors. And those 9 sectors, not surprisingly, they are around energy, transportation, and big heavy industries. And for all those sectors, we have a clear view on how they need to decarbonize year after year, and by 2050, we have the ambition of being net zero. That's the commitment we've made. And we are making sure year after year, we foster changes that are required in those various sectors so as to decarbonize their activities.
Now, when it comes to banks that power entire industries, the wholesale banking, what can banks do to really reduce some of their customers' outputs? And what are the technologies that enable them to do that when they're dealing with clients that large?
Yeah, well, I want to also look a little bit broader. So for me, let's say in terms of general, how can banks help to reduce their clients' footprint, right? We are helping one of the bigger Dutch banks, for instance, also setting up a program where they help their clients also measuring their own footprint and also advising the client to reduce that footprint. But it's not just because of the footprint, it's also if you can find a way that you can monetize on that, or that you can even reduce cost while at the same time reducing your carbon footprint, then of course there is a way more interesting business case. So, you know, a bank being a financial institution can help their customers understanding their financials and helping them reduce costs while at the same time also reducing carbon footprint. And there's a lot of possibilities, of course, to do both at the same time. And I think then it works, because nobody really is only there for ESG purpose. It also has to be to have a benefit on the other side.
It can't just be innovation for innovation's sake.
Exactly. And this is more, for instance, at the wholesale world. So helping business clients reducing their footprint. But we have also, for instance, helped that same bank providing, let's say, insights to retail customers. And they have a tool that allows to make a, let's say, estimation of the carbon footprint based on the transaction data of customers that they have. And of course, you know, this is something that doesn't reduce it at once, but at least it creates awareness. And this is, I think, where it all starts first, right? Awareness first, and then you can also help and advise customers reducing a footprint.
One of the biggest segments for a lot of institutions is their retail client segment. Mm-hmm. I'm intrigued, how can banks start using their applications to improve their customers' visibility, as you mentioned, of their footprint?
Yeah, I think it starts with, again, with that awareness that I was just referring to. But based on you know, making that first awareness step, there needs to be actions too, right? So I think that would be a next step where you can actually provide also advice to those retail clients on how to reduce.
Like an old school banker.
Like an old school banker, although I would say this is retail. Again, I'm in technology. There is a lot of ways to solve this also through the app or through other types of communication.
Now, if we look more towards within the bank, for instance, a major part of a bank is reducing risks. And especially when it comes to lending, you've now got the added risk of steering your loan portfolio towards the Paris goals. So how is ING looking at steering your loan book to a more sustainable and ultimately to the Paris goal definition?
Absolutely, because indeed the ambition of Paris is in line with that reduction that we have defined. So now the question is, how do we make sure we get there? And that's where the engagement with our clients is absolutely key. So we have now at, let's say, its inception, what we call the green light stage, an approach during which not only we look at indeed how likely is the client to repay us, how likely is the transaction to be profitable for us, but also we look at how emitting that financing is going to be. And we need to make sure now that each and every new transaction is in line with our own ambition in terms of decarbonization.
Now, with that in mind, there's a lot of moving pieces here. Do you think ING is in track to meeting those Paris goals?
The good news is that now we have a very clear picture about where we want to go. In terms of achievements so far, we monitor that very strictly. Each year we publish what we call a climate report. And in the last one we've published in September, we've disclosed the fact that on 9 sectors, 5 are on track of decarbonizing. 3 are close to be on track, so we have good hopes that with the work we do these days, we are going to get there. And 1 is struggling much more. This is the aviation sector. And the aviation sector was on one side impacted by the remainder of the COVID crisis in 21, but also is a very tricky sector with a lot of technological changes that need to happen, and technologies are not there yet completely. So we are working together with the industry so as to have a better understanding of indeed the acceleration that is required so as to finally be on track with that sector.
There's a lot of talk about, you've mentioned aviation as being a significant industry that's maybe falling behind, but other ones like oil and energy, again, if we look at that, a lot of NGOs are saying maybe the institutions aren't doing enough to tackle climate change here. What would you say in this instance, and is ING doing enough? Is there an element of greenwashing? How can we tackle this together in the right direction?
Yeah. Oil and gas is a particular area and a more, I would say, sensitive one. And we are glad to be challenged by NGOs on that front. I mean, I think society needs that kind of debate. At the same time, as a bank, we finance the real economy. And we are also conscious of the impact bold changes like that may have on that economy. So that's why, and again, looking at what science is telling us, the world will continue for the next 20 years to need oil and gas. So we cannot just step out from one day to another. It's a question of balance between, indeed, our sustainability ambition, but also energy affordability for the people, ultimately, to be able to warm their home, but also security of supply. So that's why we support that reduction of financing oil and gas. And for instance, we've announced that we were not willing to finance projects or to be involved in project financing for new oil and gas fields. But also we know that for a while we need to continue to support that industry. In the meantime, we want to accelerate financing renewable, because this is where basically we need to ensure that the supply comes sufficiently in the future.
How can banks not only take the sustainable approach for the current reduction, but also enshrine a concurrent movement to establishing long-term sustainable goals in the future as well?
Well, I think this goes hand in hand, right? If you make a strategy on this, you should never look on the short term.
Right.
Right? And again, they will be forced anyway by regulation to reduce carbon footprint and also look into more other dimensions of ESG, of course. There's more than just carbon footprint. There's also inclusivity and all those kind of programs that are there.
The S&G.
Again, if you ask me, it will be society anyway. You know, there's regulation, but society will also force banks to focus on this. I think on the longer term, they will lose clients if they don't have these programs. It will be a competitive advantage as a bank if you are a front runner in terms of ESG, just because definitely the new generations that are coming there will focus more on brands with a purpose. So you can't start early enough with serving that purpose, I think, if you look into the future and you want to have a sustainable future as a bank yourself too.
It has to be started right at the beginning.
I think so, yes.
And I'm guessing that's how Mobiquity helps them.
That's also how we help them. And again, it's what I think what's also important, you can think of it as a, you know, it needs to be in your DNA too, right? You can't just have a program for marketing purposes. I think it's also important that you create that culture inside your bank, that it's not just a necessity because it's regulation, or not just a necessity because it's important to our brand. It needs to be, of course, part of a bank's culture. And these are big institutions, so it will take time, of course, to make that move. But I think, again, the successful banks of the future are based on, let's say, the ability to make that type of transition.
That's all we've got time for in today's episode of the Fintech Show. You can catch the rest of the series and so much more over at ffnews.com, of course YouTube, but especially LinkedIn, where you'll see me in the comments. Thank you very much and goodbye.